Today, Bitcoin retreats to the $108,000 level. Coinbase announces it's acquiring crypto investing platform Echo, and Chainlink's Sergey Nazarov explains what was discussed during meetings with lawmakers on Capitol Hill this morning aimed at pushing crypto legislation forward. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Digital currencies are giving back the gains they made earlier in the week. By noon Eastern, Bitcoin dropped to the $108,000 level after crossing above $113,000 yesterday. Ether fell back to the $3,800 mark, and Solana dropped to $184. Now that decline comes even as Hong Kong just approved a spot Solana ETF, beating U.S. regulators who are currently considering the approval of similar products. Also, taking a look at shares of Galaxy Digital, that stock got a boost yesterday after reporting a $500 million profit in Q3, but today it's down nearly 15% as of noon, as major indices are also in the red. Okay, let's talk about the top stories. Coinbase announced the crypto exchange is acquiring digital asset investing platform Echo. In a news release today, Coinbase said it would pay approximately $375 million for the deal through a mix of cash and stock. Echo lets crypto companies raise money through token sales, allowing users to buy into those tokens directly on the platform. Coinbase said since its launch, Echo helped crypto projects raise a combined $200 million across 300 completed deals. This acquisition, if approved, would let Coinbase facilitate fundraising for crypto businesses and unlock secondary trading of tokens on Coinbase's platform. Next up, another acquisition to watch. Institutional crypto trading platform FalconX is buying ETF provider 21 Shares. In a press release this morning, FalconX said the deal would let the company accelerate the creation of tailored investment products that meet growing institutional and retail demand for regulated digital asset exposure. 21 Shares manages over $11 billion in assets across 55 products. Its ARK-B spot Bitcoin ETF, created in partnership with ARK Invest, has around $5 billion in assets under management. Last, SEC Chair Paul Atkins joined CNBC Squawk on the Street this morning, where he addressed whether the government shutdown is holding back the agency's Project Crypto. That's the SEC's initiative to modernize U.S. securities regulations to include digital assets. He acknowledged the shutdown does affect the agency's work because staff cannot move ahead on the proposals the SEC is hoping to roll out. Chair Atkins also explained the SEC's approach to crypto under the Trump administration, especially as a comprehensive market structure bill is pending in the Senate.
Unfortunately, the SEC in the past has focused on regulation through enforcement. We're not doing that anymore. We want to have forward-looking regulation. We need to accommodate this new technology under rules and give clarity to people. It'd be great to have that undergirded by legislation from Congress, and so I'm hoping that Congress will be able to do as the president asked and deliver a bill on his desk for signature by the end of the year. I think that would be great for everybody, for market structure and for clarity, for people to know what's a security, what's not, and for us to be able to harmonize with our fellow regulators.
All right, sticking with digital asset regulation for our main story. I spoke with Sergey Nazarov, co-founder of Chainlink, this afternoon, as soon as he wrapped two closed-door meetings with Senate Democrats in Washington, D.C., and right before he was set to meet with Senate Republicans about the future of crypto legislation. He breaks down what was discussed with Democrats and what he hopes to accomplish when meeting with Republicans. You're having a very busy day there on Capitol Hill. You just walked out of your second meeting this morning with Senate Democrats, where your conversation focused on efforts to move a crypto market structure bill forward. What was discussed during those meetings, and what was the sentiment from Senate Democrats regarding the path forward for crypto legislation here in the U.S.?
So I think there's a very strong commitment from Senate Democrats to get this bill done. I think they've invested a lot of time in it, and they're going to continue to invest even more time in it. So that's great. I think there was a recent leak of some of their DeFi ideas, which were early ideas, which has created, some contention and some friction. But that contention and friction, I think, will get resolved pretty quickly. The value of the bill and the value of our industry is so high that I think both the Democrats and the Republicans have enough of incentive to come together, which is how they both feel. I'm going to go to a big Republican meeting soon, right after this call, actually. And there, I think, I'll see a similar thing is a high level of commitment. So I'm really impressed by the level of commitment. I think the commitment is definitely there. And I think what'll continue to happen is they'll come together, they'll get past this bump in the road and move on to make the bill happen.
And what are you hoping to accomplish during your meetings with Senate Republicans this afternoon that you just referenced? What is the main message you want to convey, especially after hearing from Senate Democrats this morning?
So I think just collaboration is an important aspect of this process. I think we're going to push the Democrats and the Republicans to work together on this bill. That's what we've been doing so far. The Democrats have concerns about illicit finance. The Republicans, have some concerns that I'll hear soon. We try to find creative solutions to those problems with them. We try to provide technological solutions and ideas that can assure them that blockchain technology actually makes illicit finance less likely, that assures them that, their concerns about how transactions work can be addressed correctly on chain. So that's usually the role that we play, is we clarify what the technology can do. And usually once we clarify that, they become more comfortable with moving ahead and also pushing them, towards each other to collaborate on these things.
And who else from the crypto industry is there with you right now partaking in these meetings today?
I mean, it was a few great folks. Brian from Coinbase, the CEO of Kraken, Hayden from Uniswap. A lot of really smart, thoughtful folks were there. They expressed similar ideas to me and others. They want to see this bill passed. They've been working like us with many of the top senators on the Democrat and the Republican side, trying to bring them together, trying to clarify what the technology is able to do. The levels of illicit finance in our industry are actually much, much lower than the traditional financial industry. And so clarifying the statistics on that, the reality of what blockchain technology can do, I think is what me and the other CEOs have been spending time on, because the technology really is superior in many key ways.
And overall, when it comes to crypto legislation, where do you think there is bipartisan alignment, and what areas do you think still need some work?
I think that the question of illicit finance is still a question that's in the process of getting worked through. If you looked at a lot of the points on the leaked DeFi ideas from the Democrats, I think illicit finance was at the core of a lot of those questions and problems. I think that is still an open question from the Democrats' point of view. I think you can have a version of DeFi that's the traditional version of DeFi, and you can have regulated DeFi. And regulated DeFi can comply with all the requirements very clearly. The intermediaries, the ones that do AML KYC, the on-ramps and the off-ramps can identify people and have them go into separate pools of capital for DeFi to be functioning in a very compliant, regulated way. And then you can have traditional DeFi, which is less regulated, but still allowed by the US. So I think there's definitely ways to solve this problem. I think it's just a big worry that people have had about our industry for a long time, that any increase in our industry might result in more illicit finance. And the reality is that the percentage of illicit finance in our industry is actually very low. The numbers that I heard quoted was 0.1 to 0.5% of the industry, whereas in the banking sector, it's like 1 to 5%. And then also there's a lot of mechanisms to make sure illicit finance doesn't happen in our industry. So actually, I think if our industry became the blockchain technology became the leading source of banking operations and money transmission operations, you'd actually see a massive reduction in illicit finance, not an increase. And I think that's the thing that people need to understand.
Now, you've been spending a lot of time in DC recently. In fact, just last month, you spoke with us here on Crypto World as soon as you finished meeting with SEC Chair Paul Atkins, where you discussed compliance and interoperability across chains, as well as the factors that would allow firms to engage in tokenization more so inside the US. You noted that there is a very serious effort underway by the SEC to solve many open questions involving crypto. Since it has been more than a month since that meeting with Chair Atkins, have you been noticing any changes from the agency? Do you think the SEC is taking your insight to heart?
Well, I think the reaction to our meeting was very positive, and a lot of these compliance questions and interoperability questions are very relevant to this market structure bill. Our engagement with the SEC hasn't been as active due to the government shutdown. So we're still speaking to different members of their staff on different topics, staying in touch. But the government shutdown has definitely slowed down everyone's engagement with the SEC, with the CFTC. So I think that the government shutdown has slowed everything down. It slowed down regulatory engagement. It slowed down this bill. I think it's probably one of the biggest risks to the bill's success is that if the government shutdown continues, the bill can't, really happen. And the regulatory conversations with the SEC and the CFTC are in a similar state. There's people that are discussing a lot of things with them, and now they kind of have to pause until the government shutdown's over.
So what do you think that means for the timeline for the potential of seeing a crypto market structure bill become law here in the U.S.? A lot of senators were hopeful, including Senator Cynthia Lummis, who I spoke with in Wyoming at the Wyoming Blockchain Symposium, was hopeful that we would see a crypto market structure bill here in the U.S. become law by the end of the year. This whole situation might pause that timeline. What do you think?
I mean, I'm hopeful that these two groups, the Democrats and the Republicans, can come together. I see a lot of positivity from the key Democrats. There were the 10 Democrats in the room here with us, which is all you really need to get to the 60 to get the bill passed. Obviously, more is better. And I see a lot of interest from Republicans. So I think the political will is still there. I think the shutdown creates a risk. And I think, we're running out of time to do it this year. So I would say that at the moment, I'm still hopeful, but getting the bill done is definitely at risk based on the shutdown and how long that continues.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.